Then comes the effort of getting the financial reports back out and analyzing them. And this is where those gut-based entrepreneurs, they don't know how to read a financial report. And I used to be one of these entrepreneurs. So, 28 years ago when I started my first company, I had no idea what a financial report was. I heard of an income statement, but I didn't know what was on it. I've never taken an accounting class. I still haven't taken an accounting class. And I've read a book or two on accounting, but nothing that actually teaches you accounting. And so I learned about financial reports by being a manager at a venture-backed company, my own companies. And the accountants would hand us these, and every month we'd have a board meeting and we would have discussions about it. And so over time, you hear the discussions and you start to understand the numbers. And clearly I'm a numbers person, right? I'm an analyst and a mathematician. So numbers don't scare me. And so I'm going to show you what I like in financial reports, and I'm going to show you what I don't like and what keeps showing up in my doorstep when people are sending me financial reports. All right, so these are real financial reports that are sent to me. Prepared by actual accountants, not internal accountants, but external. These are audited financial sheets. For those of you who don't do this for a living or haven't done this over and over again, there are 3 reports that are the standard, the GAAP standard for accounting reports. One is called, and everything has multiple names. One I call the P&L, profit and loss statement. It's also called the income statement. It's the most useful one. The second one is the balance sheet. And the third is the cash flow statement. So this is what I'm handed often when it comes to an income statement. So it starts out with revenues. So as you can see here, we have no idea what currency it's in. I deal with 27 different currencies in my job. So it's kind of a pain when I get one of these and I have to go back, look what company it came from, go, okay, that was Tanzania. This is Tanzania. Oh, it's Tanzanian shillings. Great. I don't remember what a Tanzanian shilling is in dollars. So I got to go look that up. I think all of these are currencies. I think every number on here has to do with currency, but there isn't a single currency symbol in sight for me to know that. Little things like that bug me. I don't know if this is 2 separate months and we just don't have any information from May, or whether this is trying to be 2 different quarters. I don't know why it's June, and I presume that's 2018, in April 2018. I don't know why. I have to go back to the entrepreneur and ask. They usually don't know why because they didn't prepare this. So then we have that issue of I only get secondhand financials. And then we get some just oddities like, okay, we got revenues. Okay, it went down by a lot. Don't know why. Hopefully note 4 tells us why. Underneath that, we have the same number again. I don't know why it's repeated. Under that, we have the same number again. I don't know why we have 3 of the same numbers. Then we have cost of sales. And that has a different, there's lots of names for that. I would call that cost of goods, but that's just nitpicky. It's a negative number. Parentheses mean negatives if you don't do counting. There is a standard out there apparently, because I've seen this over and over again, that expenses are negatives and everything else is positive. There's also a much more common standard that everything is positive except for losses. So it bugs me when I see cost of goods as negatives. Anyone who's an accountant, you can tell me why this is. A negative cost of sale would mean the customer is paying you for all the parts and the product on top of that. Same thing with expenses. That would mean that the landlord's paying you rent for the building that you're renting from them. That would be a negative expense. So that gets confusing. Anyway, we get down to gross profit, which is also called net income. It also went down, don't know why. We can see the cost of sales went down a lot, but we don't have enough information. Hopefully note 5 tells us. Then we get operating expenses. They're all lumped together. So great, there were some expenses. They went way down. Don't know why, because hopefully note 6 tells us. And then we get to what's usually called the bottom line, which has lots of names. It's profit, in this case, operating profit. Could be net income. There's lots of ways to describe this line. This is, in fact, what's usually called the bottom line. And it went up. And that's good. Okay, so why? Well, it's hard to tell. There's a lot of numbers here, and there isn't really enough information to know why this company made more money even though the revenues went way down. Then they paid some tax. If you don't know this, taxes come after profits. They're not part of your operating expenses for some reason. And then you get the, there's stuff below the bottom line, which is also a little odd in speaking here. but then you get the actual, hopefully, change in cash, right? The actual profit line. And that went up too. So, okay. What we know from just looking at this, it would take me like 2 minutes to glance through this and get confused enough and then send off questions to the entrepreneur. But, it's not bad news because the profits are up, but why did the revenues go down so much? New competitor, price dropped by half, sold half as much stuff at the same price. We're not doing this in dollars, so it's not a depreciation of the currency. There just isn't enough information, and apparently we have to go off and find notes 4, 5, and 6, which we're not going to do. We're going to move on to the next statement. The next statement, this is what the balance sheet looks like. I believe it's the same company. Now we know it's Tanzanian shillings. That's what TZS stands for. That's helpful at the top. A balance sheet exists to explain what the company owns in terms of assets, what it owns in terms of receivables, how much people owe us, customers owe us usually, how much money is sitting in the bank. And then the other half of it, then there's a whole bunch of stuff about equities and liabilities that for startups make no actual logical sense. So you can skip that. And then underneath that is how much we owe other people. So what's the total amount of loans and payables that we have? So we have a 15 million shilling tax we haven't paid yet. And then in June, we don't have any payables. We've paid every bill. But in April, we owed a bunch of money. Maybe that's why we made more profit, because I don't know. And then the balance at the bottom, again, in startups doesn't mean anything in terms of the value of the company. So I usually ignore that. And then again, there's a bunch of notes. The most important lines in this whole thing, when I see a balance sheet, I'll go straight to cash in the bank because I want to know what that is. That really tells me whether or not the company is in trouble or not. If the cash is going up, that's good. If there's cash in the bank, that's good. That means we have opportunities to do things. And if we don't have cash in the bank, then we're probably going to have an issue coming up soon. And then I'll flip to receivables to see how much we're owed. And ideally, in this case, we're getting a not one-time snapshot. It's often you get a balance sheet and it's just the current moment in time. In this case, we can compare to April, but again, I don't know what happened in May. But I want to see, is the receivables holding steady? And I want to see if the bills are being paid. And that's it. I'll basically look for those 3 lines. And then the last thing, I said there's a P&L, there's a balance sheet, and there's a cash flow statement. And what I found interesting as I started teaching this many years back, I thought about my then 20 years of experience running software startups, now 28 years of experience running companies. And I can say that not once in any board meeting did we ever talk about a cash flow statement. So if anyone out there can tell me what a cash flow statement is useful for in a company that makes a product and sells it, please chime in.
Are you asking for that now or just in general? So I the cash flow statement is actually more important than some of the others because it shows you that you have the ability to fund what you need to fund in order to create the product to sell it while you're waiting to get paid for it. Because it's possible to be profitable, but to run out of cash.
Yeah, so what I've found is when we're using cash accounting in our forward-looking financial projections, because it's the only thing that makes sense to do in the forward-looking, it means that we'll use cash accounting when we're managing the company. We may do accrual accounting for tax purposes, but we'll use cash accounting for both forward-looking and backward-looking, and that will tell us on something I'm about to show you whether we're going to run out of cash without ever even generating this statement. So I think we wind up in the same place, but literally I don't know how to read this statement. I have looked at one of these so few times in 28 years. I could probably figure it out, but I don't know where these lines attach to the other 2 statements.
I had heard in various startups that it's sort of there's a sequence of moving from being not profitable to being cash flow positive to being profitable, and so focusing on Yeah. So I don't know if that's related to this statement or not.
I don't think so. I'll get to it. It's about 3 or 4 slides away.